Welcome to our channel Trade with China. Today we are going to start a new session introducing the most prosperous Chinese international companies and their establishers' stories. And understanding these stories, we think is vital to future cooperations and better understanding in trades with China. Today we're going to talk about Xiaomi and its CEO LEI JUN.
That's right, a huge name.
Maybe you know Xiaomi for cell phones, but they also develop smart home appliances and even cars. They're enlarging their business map now. Its CEO is very famous in China.
Absolutely. LEI JUN is quite the figure.
So today we're really diving deep into Xiaomi. We want to unpack the business logic, How do they achieve such, explosive growth?
It's a fascinating case study, especially how LEI JUN, who came from software, really applied this internet mindset, the speed, to manufacturing hardware. It's quite different.
Right. Not the usual path.
Not at all.
Right.
And we're going to look at how that specific philosophy helped them scale globally incredibly quickly.
And when you say scale, the numbers are pretty staggering. Founded April 2010, right? And by 2012, their first full fiscal year, they'd already hit, 10 billion RMB in revenue.
10 billion. Yeah, just straight out of the gate, practically. And then, get this, by 2019, just 9 years in,
Fortune Global 500.
the youngest company ever on that list. It tells you something about the velocity.
It really does. But it's not just phones, is it? You mentioned the ecosystem.
No, that's crucial. The phones are sort of the gateway. Their big play is AIoT, artificial intelligence, and the Internet of Things. Think smart home, connected everything.
And the scale of that.
Huge. As of early 2022, they had something like 478 million connected devices. And that's excluding phones and PCs.
Wow. Okay, so that's the ecosystem.
It builds this protective moat around their users, makes the whole offering stickier.
And for people watching this, maybe investors or traders, the global reach is key here too, right? It's not just a China story.
Not at all. They're in over 100 markets now. Overseas revenue is about half their total business.
Half.
Yeah. And it's not just emerging markets either. Sure, they've been #1 in India for smartphones since, Q3 2017?
Right. A huge market for them.
But they've also made serious inroads in developed markets. Europe, for instance. They even hit #2 globally for a bit in 2021. Actually overtook Apple briefly in shipments.
Overtook Apple.
Briefly, yeah. And consistently top 5 in, I think, 62 countries or regions. So the model travels.
Okay, so let's rewind. The origin. LEI JUN. He was already successful at Kingsoft, a big software company. Why hardware? Why phones?
Well, it seems he was genuinely frustrated. He looked at China, the world's factory, and saw, either low-quality stuff, or if it was good, it was really overpriced.
So a gap in the market.
More like a mission. He believed China could make top-tier products, but make them accessible, affordable for everyone. Quality didn't have to mean expensive.
And he saw the mobile internet wave coming around 2009, 2010.
Exactly. Android was taking off. He saw the potential and defined this, core mission. Make the world's best phone, sell it for half the price.
Half the price. That sounds risky. How do you even do that without going bankrupt?
That's where the famous iron triangle comes in. This is their core business model. It's key to understanding them.
Okay, break it down for us.
3 pillars. First, hardware, like the phones, sold very close to the actual cost to make them, sometimes even at cost.
Right, minimal or no margin there.
Precisely. Second pillar, new retail. Super efficient sales channels, mostly online at first, very lean offline presence, keeping overheads down.
Got it. And the third?
This is the crucial one, internet services. This is where the profit is designed to come from. Software, apps, ads, services delivered over the lifetime of the hardware.
I see. So the phone isn't the product they profit on, it's the platform for the profit.
You've got it. They sell the hardware cheap to build a massive user base, then monetize that base through services. It's what they call a dimensional reduction attack.
Dimensional reduction. Sounds intense.
It just means they compete differently. Traditional hardware companies need margin on the box. Xiaomi says, we don't need that margin there. We'll get it later, over time, through services. It fundamentally changes the economics.
And driving all this is LEI JUN's philosophy. The Internet 7 words formula.
Yeah, it sounds a bit cryptic, but it's their core operational mantra. In English, it translates roughly to focus, extremity, word of mouth, speed.
Okay, let's unpack that. Focus, extremity, word of mouth, speed.
Right, focus on core products. Extremity, GZ, means pushing the product specs and engineering to the absolute limit for the price point, really delivering overwhelming value.
Makes sense. Quality and specs beyond expectations.
Which then naturally generates word of mouth. Happy users become advocates, reduces marketing spend.
Clever. Less spent on ads means lower prices.
Exactly. And finally, speed. Rapid development, rapid iteration, rapid response to the market. Internet speed, but applied to hardware cycles.
Okay, that framework helps. But let's see it in action. You mentioned stories. Give us an example. That first phone launch, the Mi 1 in 2011.
Right, August 16th, 2011. It was memorable. They announced the price, 1999 RMB, which was incredibly aggressive.
And the reaction.
Huge applause, relief, then excitement. But then the orders started pouring in. They got 300,000 pre-orders, like almost immediately.
300,000 for a brand new company.
Yeah. And remember, they were a tiny startup, no established supply chain, no credit lines with manufacturers. They needed cash up front to build those phones.
So massive demand, but no way to meet it quickly.
Exactly. They simply couldn't produce them fast enough. That's scarcity. Well, it fueled the hype, but it also led to criticism. People called it hunger marketing.
Suggesting they did it on purpose.
Whether intentional or just a consequence of being overwhelmed, it created this intense buzz. It was chaotic, a trial by fire, but it proved the price point resonated powerfully.
Okay, so speed met scarcity. What about extremity, the power bank story?
Yes, the $49 power bank. Or rather, the 69 RMB one initially, which was incredibly cheap then. The challenge was simple. Make a big capacity, reliable power bank that cost next to nothing but felt premium.
And the extremity part?
It was in the components and the design. They used high-grade 18650 battery cells, the kind usually found in laptops. Much better quality than typical power bank cells then.
Okay, better guts.
And the casing, they insisted on the sleek, integrated aluminum body. Anodized aluminum with curved edges. It looked and felt way more expensive than it was.
But that kind of design,
Yeah.
that's hard to manufacture cheaply, isn't it?
Extremely hard. One story goes that their manufacturing partner searched like 30 cities and went through nearly 200 different molds over 3 months just to get that specific curved casing right.
Wow. All that effort for a cheap accessory.
That's the extremity principle. Pushing the limits on quality and design, even for low-margin items. It built brand perception and proved they could scale quality efficiently. It became a massive seller.
Okay, so we have speed, extremity.
Right.
What about word of mouth? The "Are you okay" meme.
Chuckles. Yeah, that one's famous. It shows their approach to users, to community. This was 2015, a launch event in India.
Right.
LEI JUN was on stage trying to connect with the Indian fans, huge enthusiastic crowd, and he just spontaneously greets them with, "Are you okay?"
Just like that.
Just like that. But his pronunciation, combined with the context,
Mhm.
back in China, someone clipped the audio, maybe remixed it slightly, and it just exploded online.
Exploded how?
He became an internet meme,
Nice.
especially on sites like Bilibili. People made songs out of it, auto-tuned it. He became this kind of accidental internet celebrity singer.
Oh, wow. How did the company react? Most CEOs would hate that.
That's the interesting part. A traditional company might have tried to shut it down, control the message, damage control.
Right. Embarrassing for the CEO.
But Xiaomi leaned into it. They embraced the meme. LEI JUN himself sort of acknowledged it humorously. It showed they didn't take themselves too
We like
seriously.
the impact.
It massively boosted his relatability and the brand's connection with younger users. It reinforced their whole philosophy of making friends with users. Being authentic, even a bit goofy, was better PR than a stiff corporate image. It generated huge organic buzz.
That's fascinating. Being willing to be the joke actually strengthened the brand.
Precisely. It cemented that trust, that word-of-mouth engine.
Okay, so things are flying high, but then you mentioned a low valley. Things didn't stay easy. This is where it gets really interesting.
Right. Around 2015-2016, after reaching #1 in China, sales suddenly stalled, actually started to decline, which in the smartphone world is often a death sentence. Very few companies recover from that.
What happened?
A combination of things. Externally, the market was getting saturated. Plus, there was a big shift back towards offline retail sales. Remember, maybe 80% of phone sales were still happening in physical stores back then.
And Xiaomi was mostly online.
Exactly. Their lean new retail model was a disadvantage there, and competition intensified massively. Huawei, Oppo, Vivo, these big players were like aircraft carrier fleets, huge resources.
And internally,
yeah.
were there problems?
Yeah, reports suggest some complacency set in after the rapid success. Maybe the management structures hadn't kept up with the sheer speed of growth. Focus might have blurred. It got serious enough that LEI JUN himself had to step back in and personally take charge of the phone division again.
So a real crisis.
A huge crisis. But the fact they pulled out of it, that they managed to reverse that decline when almost no other phone maker had ever done so, That was seen as a massive validation, a baptism of fire, really. It proved the core model was resilient.
And after weathering that storm, they made this huge public commitment, right? Post-IPO in 2018, the 5% promise.
Yes, this is really unique. They passed a formal board resolution, legally binding, stating that their overall net profit margin on all hardware products, phones, smart devices, everything, would never exceed 5%.
Never exceed 5%. On hardware, that seems counterintuitive for a public company. Why limit your profits?
It's a masterstroke in building long-term trust. Think about it. They're legally committing to their core value proposition, touching hearts, offering honest pricing.
So it's locking in the low-price strategy.
Exactly. It tells users, we will never gouge you on hardware. Any profit made above that 5%. They pledge to return it to users in some way, likely through even better prices or value down the line.
How does that play with investors, though? Limiting upside.
It reframes the investment. You're not betting on massive hardware margins, you're betting on the ecosystem. That 5% promise secures the user base, builds incredible loyalty, and that loyal base is what feeds the really profitable parts. The internet services and the vast AIoT network. User trust becomes the core financial asset.
Okay, that makes sense. It's a long game.
Yeah.
So looking ahead, what's the strategy now?
The official line is smartphone x AIoT. They see it as multiplicative. The smartphone is the control center, the core, but the AIoT ecosystem, those hundreds of millions of connected devices, amplifies the value massively.
Stickiness again.
Huge stickiness. And within that, they're making a big push into the high-end market. Since about 2020, with phones like the Mi 10, Mi 11 Ultra, they've called it a life or death battle.
Strong words.
Oh, yeah.
And guess who? Apple? Samsung?
Primarily Apple, especially in China. The stated goal is to fully benchmark the iPhone experience and become the #1 high-end brand domestically within 3 years. A very ambitious target.
Okay, high-end phones, massive IoT ecosystem, and then the big one, cars, EVs.
The EV leap. Announced March 2021, LEI JUN called it his last major entrepreneurial project, and they're backing it seriously, a $10 billion commitment over 10 years.
Why cars, though? Seems like such a different industry. Manufacturing complexity, safety regulations.
If we connect this to the bigger picture, LEI JUN's perspective is key. He doesn't see EVs primarily as traditional cars. He sees them as the ultimate consumer electronic device on wheels.
Software defines the car.
That's the phrase. He believes the core battleground will be a software, user experience, connectivity, intelligence, all areas where Xiaomi already has deep expertise from phones and AIoT.
So the iron triangle applies again. Hardware, the car, new retail, how they sell service it, and internet services, in-car software, connectivity, autonomy features.
That seems to be the strategic thinking. Leveraging their existing ecosystem, brand trust, and software-hardware integration skills to attack the auto industry from a different dimension, just like they did with phones. It's a huge bet, obviously.
Definitely. So wrapping this up, what's the core takeaway for someone trying to understand Xiaomi, maybe for trade or investment?
I think it boils down to relentless efficiency, driven by that internet philosophy, applying software speed to hardware, and crucially, building the entire business on a foundation of user trust, cemented by things like that radical 5% promise.
But what does this all mean? For global investors, understanding Xiaomi means recognizing the power of that internet 7 words formula. It's not just slogans. It's an operational model that lets them disrupt industries by focusing on long-term user value over short-term hardware profit.
Right. That user-centric trust becomes their core long-term asset. It's the engine for the whole ecosystem.
Your comments really encourage us to realize our video value and encourage us to update more useful information. If you like this kind of content, please press like E and subscribe us, not to miss the possibility to understand and make money in trades with China. And here's a final thought to leave you with. LEI JUN committed Xiaomi legally to that 5% profit margin ceiling on hardware, but the electric vehicle sector. It's brutally competitive, capital-intensive, the ultimate high-end complex hardware. Well, launching a car forced Xiaomi to test the very boundaries, maybe even the definition, of that promise. That is a deep dive for you to consider.
Your comments really encourage us to realize our video value and update more useful information. Please press like and subscribe us, not to miss the possibility to understand and make money in trades with China.